Well, ladies and gentlemen, good evening, good afternoon, good morning, wherever you are in the world. So it's Monday. What do we know? Apparently, the US government shutdown might be coming to an end this week. Just got declared right now. White House senior advisor Hassett says, I think the shutdown is likely to end sometime this week. Funnily enough, they're going to be releasing the CPI data on Friday. Very good. The problem is they're kind of thinking that inflation is going to be going up. But what does that mean, Tino? Well, it simply means that all the guys betting for a rate cut might not get it. I mean, the last time that we had this scenario where data was not going to be released because the US government shutdown was back in 2018. But then they were like, we need to release it. And that's when they actually had the release of data when the US government was shut down. And they're doing it again now. So hopefully they open beforehand and then we can find out where we are with all the labor details. But the CPI data is the critical element to work out whether or not the Federal Reserve is going to sustain this path of easing because they've cut the interest rates. Now we want more. I mean, 25 basis point didn't do nothing for us. We need more cuts. In today's live stream, we're going to break it all down for you, ladies and gentlemen, to understand exactly what we can expect going into this week. It is a relatively quiet day today in terms of data because we don't really have anything. But with that being said, we are at the helm of Mr. Donald Trump. He's going to be speaking to the Commonwealth Prime Minister in Australia. And what could he say? I mean, he could be talking to him and be like, hey, man, yeah, let's just have a conversation. We're all right with China. All he needs to do is say that. And the markets will be like, oh. And everything will just go wherever it needs to go, okay? So just be very mindful when Mr. Orange, Mr. Vitamin C does this stuff, like start talking. You know, Trump and his comments are like vitamins. They really are, taken daily. So we got to take it on the chin when he starts talking, whether you're in a risk to the upside or to the downside. Just be very careful with that. Today, we're going to break it all down. Is Bitcoin getting primed for a big move? It's the release of the Bitcoin ETP, exchange-traded product. The UK have lifted the ban on UK residents being able to trade Bitcoin. We're going to be talking about that. And also, we're going to be diving into Bitcoin price action and understanding where we are with everything. Currently, right now, I've got some risk on right now from gold. And I'm going to be diving into that right now because I do want to get rid of it because we've got to act really quick when we are in exposure. And I hate having trades open when I'm doing a live stream because I can't really commit to paying attention because I'm literally just looking left and right. And you're like, what the hell is this guy looking at? And, you know, it's a little bit of a pain in the ass. But never mind. Let's get with the program, ladies and gentlemen. Mad love and respect. Good afternoon. Good morning. What is good? 85K incoming. Who's talking about negative movement to the downside? I mean, listen, if they do say that they're not going to cut the rates... Well, ladies and gentlemen, like it's dustbin time, you know? Get familiar with your wheelie bins. That's the story. There's plenty of space in there for us to all plant ourselves. But anyways, let's get with the program, ladies and gentlemen. Here we go. So stocks rise with futures as trade tensions ease. Yeah, Donald Trump on Friday was like, I like China. China's good. Everything's all right with China. Speaking of which, we're going into the idea that China still has the upper hand right now. If you remember back then when they had the cap on rare earth metals, they're coming back with it, ladies and gentlemen. Says here that there is a possibility that if China does decide to turn around and put a cap on the rare earth metal exports, I mean, let's just be honest right now. What a perfect time to do it. AI is booming, consumption, data centers, products. They're all building all these equipment that require rare earth metals. And China's like, tell you what, we'll just go easy on the amount that we're happy to distribute to you all. Because you want to put tariffs on us, then fine. But according to this article here with Bloomberg, Trump did say that it will hurt China. It says here that US-China trade spat appears to be easing. And there's comments from both US and China, but it's what Trump had said. He said here on Friday that the US will be fine with China. And that just really moves the markets. But the topic that we got to dive into today is the story behind the CPI data, which is going to be released on Friday. As it stands here, you've got the core CPI coming out and the CPI month on month and year on year. This is important information for us to work out if the Federal Reserve is going to cut the rates. As it stands right now for the bets, the 9 days time, of course, the FOMC, make sure you check into that bad boy. Again, it's done it. I get so angry when it does this. I can't stand it. But the bets are that they're expecting the 3.75 to 4% region. That's where here we go. There we are. So this is what they're expecting. 3.75 to 4% is the rate that we're going to get in terms of in 9 days time. So 98.9% expecting the rate to be cut. But if the data comes out on Friday and suggests a different story, then we're going to have a different story to be contending with. Now, I just need to do something, guys, because I do need to be paying close attention. I knew it. Currently in this trade right now with gold, because I set up a setup this morning for the Platinum members on the breakout of gold to the 4,270 region to break out to the upside. And you can see that gold's made that nice move to the upside right there. But I'm currently in risk right now. And we've got about £16,000 worth of options opened, as in profits. And my entry was all the way down here. And for the first time in a very long time, I traded the Asian markets in terms of the Japanese index. And that's what we had last night. We made a nice little £1,000 last night, just trading that index. And I do actually recommend that you trade the Asian indexes in the evening, okay? Try and avoid trading NASDAQ and S&P because you're not going to get that much of movement. But with the Asian session, Asian indexes, they move really well. So I managed to scalp a little bit over there. But right now, I've got this risk on with the NASDAQ, with gold right now. And I'm contemplating to get out of the trade because it is the start of the market. And I mean, you know what? Forget it. Fuck it. So we'll just close it off right there. I took advantage of the option play today. So we have a look. So these were my positions. I opened at 19 strike and closed off at 53 and replicated that 10 times. Cost me around £10,000 in margin to open. It was about £900 per position. And of course, end of the day right now, 16,471. I don't need to trade today because I've done that, but that was a quick play from the setup that I did this morning for the Platinum members right there. Breakout 4,270. And you can see right there that they've just respected that and made the move up. This is why you have to always, if you're using the hybrid system, you have to close at the strength of the vector. So if you go to the 1 hour time frame, you can see that I should have closed it earlier. So what I mean, I don't like trading it when I've got a live stream, but you can see that if I closed up beforehand, well, I would have netted a little bit more, a couple of more grand. But closing always at the vector is critical because you're closing at the most optimal point in terms of order flow and the aggressive nature of what they're trying to achieve here. Now you can see gold looks like it wants to try and pull back. Hopefully it can continue to the upside, okay? But the narrative is that they are expecting gold's price to still continue higher, all right? But that could all be changed if the CPI data comes into play and shows that they are expecting an increase, all right? Which leads me over to this story right here in front of you. Core Consumer Price Index. We got a bit of a problem because they're projecting it, and the last reading was 3.11%. They're expecting it to come in a little bit higher. That's the first chart we got to understand. The next chart is right here. The US Fed rate versus the inflation rate itself. Now, when we zoom into it, you can see here that we have got these little yellow bars right here. Those are effectively the price index for goods. Sorry, the consumer price index. We're starting to see, I mean, if we just go in a little bit more, you can see it's starting to climb. It's not it's not contracting. It's gone from a contraction to now expanding. That's no good. When you're trying to cut interest rates because the economy is starting to suffer, then why would you then cut them when you're seeing that the cost of goods and services is starting to go up? That's a problem. So that means you need to maintain higher rates for longer, okay? So looking at the way it's going right now, we are seeing price index is starting to have a bit of curvature to the upside as well. But if the consumer price index is being projected to go higher, that's going to be a problem for assets across the board, okay? Leading over to the next chart is right here. This is the core consumer price index. And that is relative to three things, okay? So a couple of things. I'm going to be getting into that in a second. But you can see here that we've got the US 10-year Treasury note. So when that is going up, okay, or when core price is going up, usually the 10-year yield is going higher as well. And that can be a little bit of a heads up as to where we could be in terms of risk on or risk off asset classes. Because if the 10-year yield market goes higher, then that means investors aren't going to be going over into the stock market because it means it's costing them more money in the future to borrow. And if the 10-year yield is climbing higher, that's going to impact tech market, okay? What we're seeing is the 10-year is kind of flatlined. So investors don't know whether they're here or there. And that's a little bit of a problem. Listen, all of this is going to be referenced to Bitcoin. It's going to help Bitcoin make movement. Okay, so understanding this from a macroeconomic perspective, you're going to then say to yourself, okay, then if I'm seeing that the core price index is going higher and the core CPI is going up, then investors' expectations of the future is that it's going to be costing the US more money at the levels that they are at, which means it's going to impact businesses across the board, which means not many companies are going to be borrowing money because interest rates expectations are going to be higher in the future. So that's something it's got to take into consideration. And then finally, this thing right here. Now, whenever we hear Jerome Powell talking about the factors and the metrics that the Federal Reserve uses to determine whether they should be cutting interest rates or not, or increasing, it's based on a couple of things here. It says here that Chairman Powell elaborated how Fed officials monitor inflation. He mentioned that to assess the measures needed to reduce inflation, and it's useful to break down the core inflation into three components: core goods inflation, housing services inflation, and services excluding housing inflation. What do we see here? Well, we can see here that we're starting to see a bit of an increase across the board. So we've got an increase in CPI new vehicle sales. We've got an increase in core goods, and we've also got an increase in CPI used car sales. When we're seeing the activity happening where there's movement in terms of goods and the CPI itself or prices are going up, that's a bit of a problem for the market because they want to cut the rates. And if that's going up, that means inflation is going to go up. So why are you cutting the rates? How's that going to impact everything across the board? Well, the idea is that if I closed off that too soon, but never mind. The idea is this. If we have got inflation going up, right, we need to look at gold and say to ourselves, well, why is gold going up still? If they think that the future is going to look like they could be not cutting the rates, why is gold going up? Well, do they think that? No. Do they think we're going to still cut rates in December? Yes. 94.3%. Now, if we went back in time to the time before we had the rate cut, what we were noticing about the Fed watch was investors were neither here nor there on whether we were going to get the cut or not. So when we were looking at October's rate cut, it was distributed like 56, 57, 65. There was no conviction from the investors, okay, in terms of where they expect everything to go. Looking at this now from October, it's a 98% chance they're going to see a rate cut. Going into December, 94% chance we're going to get a rate cut. Going into January, we've got an even distribution now. So we're back to where we were. So the good thing is we can assume that the market is pricing in 2 rate cuts. If the data on Friday comes out and shows inflation has gone up because they are expecting core prices to go higher, 0.4%, okay? That's a bit of a problem if they're expecting that, which is naturally going to have an impact on the bets for investors who believe that the rate cuts are going to come into play. So that means that if there is an expectation that inflation is going to go higher, then you're probably going to be seeing assets across the board going up till Friday. Then the expectation of the data comes out. And then if the data does suggest that we've got high inflation, that's going to then change the narrative for all the Fed speakers, because all they've been doing is talking about, yeah, we do favor a rate cut. Yeah, as long as tariff inflation doesn't really impact us, and as long as trade war doesn't happen and all of that fun and games, they keep on giving you the idea that, yeah, we want rate cuts. We expect rate cuts, but this could happen, and this could happen, which could easily impact our decision to want to make rate cuts. It's an absolute you get the idea. But the only thing that you can do is look at the sentiment across the board in terms of asset classes. So let's break it down. Gold right now, still climbing up, still doing its thing. Okay, got a nice green vector candle right there. Cool. We're so close to our all-time highs. Everyone last week was like, short gold, short gold, short gold. You're getting smacked because from a macroeconomic perspective and the easing cycle that we're in right now with the Federal Reserve, as long as there is prospects of interest rates being cut, this is what's going to happen with gold. For every retrace, it will shoot back up. They don't spend enough time consolidating with gold. That's how you know that they favor higher prices. Someone was saying that there was a big find in Africa regarding gold and it's going to increase the supply of 10%. Irrelevant. They're buying gold for different reasons. Geopolitical problems, okay? But the prospects of moving dollars out of certain assets and going into gold because the yield on the dollar is going to be lower. So they have to come out of dollars. All right, that's what's going to force the yields to go to the downside. Guys are going to start buying up the bonds because the yield expectation of the future is going to be coming in lower. Why are you going to hold dollars if your yield on the dollar is going to be lower, which gives room for our lovely Bitcoin to come into play? Bitcoin doing very nicely, 110,000, just clipped that 111,000. It's made a nice move in the Asian session. It's actually swept the Asian session high. That's happy days right there. Quickly breaking down the logic of what's going on today. We've got BlackRock launching the Bitcoin ETP. Now, just to break it down for you, this allows institutional investors in the London Stock Exchange and retail to participate in this flavor. So diving into the iShares thing, it does say the following. It says here, the ETP aims to provide investment exposure to Bitcoin. So let's just zoom in for this. Here we go. So yeah, ETP aims to provide investment exposure to Bitcoin and is traded on stock exchanges. And the ETP is backed by Bitcoin held by Coinbase Custody International Limited. And the issuer's custodian in cold storage offline. So we know they're buying physical Bitcoin because sometimes the differences between an ETF and an ETP. So an ETF is exchange traded fund. And then of course an ETP is exchange traded product. Now, sometimes an ETP does not necessarily mean that you're holding on to the asset. Sometimes it can be a synthetic thing because we've had Bitcoin ETFs before, okay? But none of them were spot. None of them were based on owning the asset. That's why this ETF on Bitcoin was such a big thing, because they are going to be consuming the Bitcoin. That's why you have got the Bitcoin ETF balances rising up so much, and there's so much happening with it. You're at now 802,311. So we have seen a little bit of a pullback in the amount of Bitcoin that's been added to the balance. It was at a high of 805,000. Looking at it, we've seen a lot of Ethereum has been dumped. Wow, a lot of Ethereum has been dumped. 3 hours ago, there's been lots of movement with Ethereum. Quickly going over to Ethereum right now to put into perspective. I mean, it's doing relatively well, if we're quite frank. We're going into the pre-open, and BlackRock has sold a lot of Ethereum. I mean, this is Wall Street, man. That's what you're going to get. Let's have a look at open interest right now on Bitcoin to put it into perspective. Here we go. Big walls of open interest up here, 817 million. And then, of course, 125,792 million. The logic says, right, now, look, open interest, when I do this chart, if I expand it here, all right, I can see all sorts of open interest. Wow, look at that. Which level is it going to go? But it's irrelevant to me because it's going to hit one of these levels either way. So what I like to do is I like to expand and increase the contractual size of open interest, and that's where the next zone should be for Bitcoin, okay? That's where it should be. The events that we need to see are as follows. CPI data comes out this week and says that inflation has come down. That will send Bitcoin to not just the power. I mean, look, everyone is waiting for Bitcoin. I keep saying this, but everyone is waiting for Bitcoin to give birth to a parabolic candle. You just want it to just give that birth, okay? Bitcoin right now is in the contractionary phase. It's in contractions. It's breathing. Push, push. That's exactly what Bitcoin's doing, all right, to help you understand it, because that's what everyone wants. It wants the parabolic move. It wants the God candle. Please, you're not going to stand to a board of hedge fund managers and say, today my analysis says, based off the rainbow chart, that Bitcoin needs to create a parabolic God candle. They will look at you and throw every piece of paper. They'll even throw chairs at you and be like, get the out of my office, you waste man. You're talking about parabolics. We are interested in delta. We want the regime, the change of regime in volatility. We're interested about open interest walls. We want gamma. That's what hedge funds focus on, because gamma and all of that options shit itself is what a hedge fund does. It manages risk. And when you want to manage risk, you use options, and that's what they do. So looking at this tells you that there's activity up here. Something's brewing up there. There's a lot of commitment. Now, it could be just people going long on Bitcoin, going short on Bitcoin, okay? We don't know what's up there, how many dealers are up there, how many of them are exercising gamma negative strategies, which means that they will buy the Bitcoin on spot and then short it on the futures, or, you know, we don't know who makes up the open interest, who's it made up of, okay? We can simplify and go, all right, then, do we have any participants buying and selling Bitcoin? Well, looking at your order flow right now, we don't really see much happening. No one's really buying and selling. Look at the depth of markets. Not really giving you anything. But hold on, Tino. You said that BlackRock are going to be launching this ETF story. Yeah. Give it 5 minutes to get into the process, get the market, understand where we are with it. It's going to be listed to about $11 or £11. All right. So it's not going to be the same price as the normal ETF itself, but it's a different entity to Bitcoin exposure. And that's what you got to look at. So when you look at the chart, you'll be like, oh, okay, wow, like, you know, we've got endorsement right there. BlackRock has been allowed to do this because the UK has lifted its ban. Happy days right there. Okay. So you want more information on that, just go over to the Bitcoin, go to BlackRock's website, and it's the iShares Bitcoin ETP. All right. It's currently trading at $10.52, which is really interesting. Still charging that. Okay. So the tier will be 0.15% per annum. Yeah, so they're still, it's not even about competitive advantage anymore because you've still got all the other guys like Franklin and Wisdom and all those guys, they're actually doing it. But let's just check out what's going on the Coinbase Premium Index. Where are we at with that? Is it red yet? It's not red yet, which is interesting. But then there have been other readings that have shown that it is. So let's just go to the week. No. The month. No. The year. No, it's not there yet. I mean, it's all the way down there, but let's just be honest now. We're going to see the same reading, aren't we? Yeah, same shit. Yeah, never mind. Let's just look at the liquidations. Right, so Bitcoin has been doing something interesting in terms of the liquidations, right? So you've got sweep 1, then you've got sweep 2. As it looks like we could be going for the third sweep, we're starting to see a reduction of commitment up here, okay? You've got a big commitment down at 105,000 in terms of liquidation. You've got nearly 245 million in long liquidations at 105,050. Let's just look at the logic of price at that point. So that's 5K away. Does that validate the idea of Bitcoin going down? Well, let's just understand that. That puts us down here. Is it safe to assume that there could be a possibility of Bitcoin at some point this week could go towards that point? More than likely, it could, okay? And all you need to do is just highlight your vector candles and your psychological ranges where Bitcoin could be going into, like so. And you react when price gets to that point and look at how it reacts from that level. You know, that's all you've got to do when you trade in the hybrid system. But given that there's nothing happening today in the marketplace in terms of data, we are subject to Donald Trump saying something. Here is the breakdown of what his schedule's like today. At 11 a.m. Eastern Standard, he's going to be meeting the Prime Minister of Commonwealth of Australia. 11:15, he's going to be having a meeting with him. And then 11:45, he's going to have lunch. And then 4 p.m., he's going to participate in a visit to the baseball champions. Shreveport, can't even say it. Shreveport baseball champion. So he's going to have a conversation with those guys. At any instance, like he did with Zelensky, he turned around and say, everything's fine with China. We're talking with Zelensky, okay? Why do we need to be knowing about China when you're talking to that guy? Just shush, like, don't mention it. But he mentioned it, and the market was like, ooh, we like this, and everything started to move up, okay? So again, just be careful today when this guy is actually having a conversation with the Prime Minister of Australia. He could talk about tariffs. He could just throw little comments to give the market the little push that it needs, in my opinion. So just be very cautious with that flavor, okay? Stock market. I've got something for you. Check this out. Veritex Holdings, okay, has an earnings per share due in 8 days' time. It's currently traded at $30.26. Its volume went in at just phenomenal levels on the Friday, okay? I have gone to try and buy some of this stock, and it's been prevented. They're not letting anyone buy this stock right now, all right? So either something big is happening with this, because this company is a holding company for Veritex Community Bank operating via 28 branches in the Dallas metropolitan area, okay? So could be good news for this bank, given that its volume came in at 1,509% on the Friday. Volume exchange was 25,682,000 shares were traded, okay? Something's brewing with this company, all right, as a bank. So it could be a big buyout, a new establishment. We don't know what it is. Haven't done any research into it, but volume like that and the fact that they're not letting us trade it tells us that it's like become common knowledge. So it's going to be interesting to see if we can actually trade this or buy it. I can't buy it on any exchanges that I'm using to buy stocks, but just keep an eye out on this company, guys, because, remember when you're dealing with banks during times of interest rates, okay? Again, this is really important to understand. What does a bank offer? It offers you a place to park money. Equally, with that money that you've got parked there, right? What products is it going to promote to you? Credit cards, mortgages, loans, savings accounts. All right, so now we're going into interest rates getting lower. So all of those products right now are going to be cheaper and more accessible to the retail trader, okay, or to the retail investor, all right? That's why banks do well during times when interest rates are being increased, but they also do well when interest rates are going down because they make money off the interest rate payments when interest rates are higher, okay? They also make money on offering products based off interest rates, like credit cards, loans, and what have you. They make money off those financial products. Like I said, JP Morgan, Goldman Sachs, Bank of America, they've all declared profits because of trading activities, not any financial products like taking on credit cards and loans and whatnot. They've not really made anything on that. They've made it all from trading activities because people are putting money to work and they're just earning off the fees. When interest rates start to get lower, we're going to start seeing a change in the way they're declaring their earnings because they're going to start seeing more and more people consuming credit and then putting it to work and then buying houses, mortgages and what have you. So you're going to see that happening as interest rates rise and as interest rates drop. Again, you want to start understanding trading, you need to understand what's going on in the interest rate market, because how are you going to understand if someone is going to buy risk on assets? They're going to borrow money first, and if it's expensive to borrow money, then what they're going to do, they're going to go elsewhere and look at other assets. So it's really important that you focus on interest rates when it comes to trading in the financial markets, okay? But keep an eye on Veritex Holdings, ladies and gentlemen, okay? Going into the open very, very shortly. Last week on Friday, we saw 251 stocks up on volume and stocks down with 276. We've got 6 days of distribution on the NASDAQ, 5 on the S&P 500, and market surges suggesting that you minimize your exposure to around 60 to 80%. We do have a very big week on its way, so just be very mindful of Friday. And of course, if we do hear any news that the US government is going to open again, then that's going to then equally bring a lot of activity into the marketplace. So just be very cautious with that, ladies and gentlemen. Okay, cool. 10K Bitcoin soon. Oh, okay. Never mind. So, can you explain how you trade order flow delta? I'm going to give it to you very simply like so. Okay. I've got an exercise for you. All right. When you look at delta, okay, I guarantee at the finish of every green candlestick, delta will be at its highest. Okay, it will be strong, all right? And that's a positive reading of delta. And at a negative candlestick, the negative reading of delta at the lows will be at its highest. Go and mark off every candlestick that you see that finishes with really strong delta to the upside, all right? When you see strong delta closing at the top side of the range, it's not because buyers are in control. No, it's because sellers have sold aggressively into buyers. Equally, with moves to the downside, when the delta is negative, it means sellers have aggressively sold into who? The buyers, which is always when you see those two instances, the market reverses. Go and take the 1 hour candle on any platform you want that shows you delta candlesticks and look at the delta readings. You will find at the lowest point of the move, it's always at a strong negative reading. It ends up reversing. And at the top side of a move, when you see it trading massively positive, it's always the start of a move back down because they've effectively absorbed, exhausted, trapped, absorbed, exhausted, trapped traders. Okay? Cool. That should be that. Does the AWS outages create new narratives for the real Web3? Maybe. I mean, that was a little bit of a problem. Just quickly going over into Amazon's stock price itself to see if they've actually recovered it from restoring it. It's not really affected them. If anything, they've gapped up. There you go. That's the gapping price. So it doesn't really matter anyway. That company's going to make it work, Tia, could you walk us through what changed in the UK regulatory regime that enabled retail investors to access crypto ETPs now? You know what, Rikesh? It's irrelevant because the UK is behind. That's why. The UK is slow. It doesn't want to miss out on the opportunity, which makes sense. Like, it's going to listen to its cousin, the US, because they are now the second largest holder of US debt. And the US is going to be like, well, you better start making that happen because we've got some players over there that have got some risk over in London. And, we want to be able to have flexibility. So the UK is like, no problem. We'll deal with that. Just look. Let me just put it into perspective. US debt holdings. Look at this. US debt holdings. If you're not with America, you're against them. And that's it. Here we go. So what we got? second. Look at that. That's a bit fitting, isn't it? UK is second. Look at how aggressive the UK is at buying US debt. Look at that. The yellow line. Let me just zoom in. That is wild. And China's just rolling off. Of course, China's rolling off. It's not interested in bonds. It's interested in materials. Just keep an eye out on China, man. It's a big story, that is. Okay? Cool. Any questions? Any questions? Don't forget Super Chat. Wait there. Let me have a look at the Super Chat. Thank you for telling me that. Thank you. Sorry. What is the best way to trade gold, spot versus options? Right, let me explain something, okay? And I'll explain it to everyone else. When I trade options, guys, right? All I'm doing, right? This is today for anybody that's new passing through. I had some gold calls and I was trading the logic of the vector candle recovery. That's all I did, okay? Because understanding the vector candle recovery, there's that red vector right there. I gave the setup this morning, 4,270. And that's the price point that I entered with my call. It's a different pricing, if I'm honest with you, because it's 4,285, okay? But I was placing the trade off the futures of gold, so not the spot of gold, okay? So it's always going to be different. 4,270, I got in at 4,285 calls, okay? I had a margin up for £19 per point. So I was putting up £1,000 per point. So that's £9,500 margin. Okay. Those were the trades. And this is the exits at 53. So I've made my money for the day. Happy day. 16,471. I'm cool with that. The market ain't even open. I don't need to care about what it does next because I've done what I've needed to do. I can easily go back and trade it, but I don't want to. Okay. But the logic for trading gold for today was just purely off the idea of back into the vector candle recovery, okay? Now, is there really a difference between trading it on the spot market or the options market? No, because ultimately, this understanding here of this red vector candle tells me that are dealers participating in that range? Are they looking for certain positions to cover themselves? Are they going long or are they selling? Or is the market maker trying to mark prices lower so that he can build it up later on? Are we liquidating previous traders, margins and what have you? What's influencing it? And ultimately, you will never know what it's going to do on the reasons for it. But history does repeat itself. If it doesn't, it certainly rhymes. And we're in the narrative of gold going up because we're in an easing cycle. Interest rates. That's all it is. Okay. And that's what leads to these little plays. Gold has been hard to trade because it just keeps going up, but any of the retraces give you the proof of the move. And then, of course, you see it's made the move to the upside. Where is it now? Gold. That is pulling back right now. So I got out perfect time. Okay. And the way I open options is like this. Look, like, let me just go to it. Options. Let's just go to gold. And then what I don't like about gold is it closes at 6 o'clock. So I don't really have that much time. So here's the strike price at 4,323. It's all the way down there, 4,320. So I'll go there. 22. So average, I'm going to be putting about 25. It was 50 positions. So that puts me at a margin of, okay, now it's at £1,173. Open 10 of those. Clack, 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 clack. And then hope for price to make the move to the upside. That is it. Don't need to do sell covered puts. Don't do that on indices or commodities. Mainly you got to do that on stocks, because stocks usually chill around 68% of the time in a range, unless you end up getting some crazy volatility. And of course, you know, it's a different ball game when you start doing sell covers, sell put options and cash for secured puts and what have you. It's a tricky game and you've got to be patient with it as well. I'm about volatility. I'm impulsive. I need in, fast out, done. And that was the trade that we took this morning. It was in this morning at, take it 1 hour back, which was the start of the move. Yeah, so it took an hour for that trade to come into play. All right, cool. Other one. Tina, I keep noticing a recurring pattern where big moves always happen after I close my positions. Am I being psychologically telegraphed by bots and algo? How can I break from this matrix? Need help. Look, unfortunately, I'm going to be very brutal with you. You have no influence in the market unless you are a market maker or you are a dealer, okay? And even then, when you're a dealer or a market maker, you're participating against other market makers and dealers. You just, who's got bigger money, okay? Don't think you are being psychologically challenged. Use that as information because you seem to be closing off before the big move. So the next time you get to a position where you feel like you want to close it, pause, do nothing. Do nothing. And say to yourself, this is where I'd be closing. Now, if you're using too much size, it's going to force you to close. But if you get to the point where you feel like you are going to be closing, pause, do nothing, and say, right, I would normally close right now, but I'm not. I'm going to wait. I'm not going to do anything. And then see what happens. And if you lose, you lose. If you don't lose, you capture the big run-up. You would have then broken that little psychological matrix because the market doesn't give two shits about who you are. It doesn't. That's the truth. The sooner you accept that, the sooner you can come away from making yourself believe that there's someone in your computer or market makers decided to knock on your door and say, we want your position. They don't give a damn about your position. They don't care about mine. They don't care about any of ours. Okay, there's no individual, but they do care about the collection of people like us. And when it comes in the hundreds and thousands, it all starts to add up. So your one lot size and my one lot size is infant to the millions of lot sizes that are all clusterfucked in one spot. And that's where they end up going to. All right. You're not part of no matrix in the trading game. You know, the market is as truthful as it is. It goes up, it goes down. If you're in profit, take it. If you're in a loss, cut it. And when you understand those fundamental laws in the marketplace, the game tends to be a little bit easier because you don't want to protect your capital. You want to protect your trading psyche, protect your mental capital. And it's a bit rich me saying that shit, but you know what? I make mistakes too. No one's perfect in this game. So once you accept that, you can't really make mistakes. If you know how much you're going to lose and price doesn't show you a reason for it to go to the point where you'll be losing, you've got nothing else to do but hold on to the trade. Me, I don't like to just take and sit and hold risk. I'm not paying attention to it. If I paid attention to it and I stayed in the move, what would have I made on gold? Well, I would be losing money now. So I did the right thing. And I know historically that when a green vector candle appears before the market opens, I can assume they're going to come back down again. So why am I going to give money away? Take it, walk away, done. Happy days. Tomorrow's a new day. Yeah? Cool. See how important are vectors on the smaller time frames? For example, if the 1 hour candle isn't a vector, but the 5 minute candle is, the 5 minute candle in the 1 hour is a vector candle. This is really important, right? To put it into perspective. A 1 hour vector candle, if you don't see a vector candle in the 1 hour time frame. All right, so let me just put it like this. Look at gold. This is a 1 hour vector candle, okay? 1 hour. Go to the 5 minute time frame. How many vectors are made up? How many candlesticks make up the vector candle? Okay. So we can say 1, okay, 2, 3, 4. There are 4 vector candles here that make up the 1 hour vector candle. So you can assume that this could be a nice rally to the upside to build the shorts, to then crush the traders who went long, build up their margins, and then rip it back up again. And how do you understand that? By the clues that they leave behind with red vectors on the way down. Okay? Now, if you get a vector candle, no vector candle in the 1 hour, but you can see that it's made up of 3 or 2 vectors on the 5 minute time frame, right? You can then assume that that candlestick might not be as strong. Okay? So then you might be a little bit cautious about going into a trade. You might say, okay, I've seen vector candles on the 5 minute time frame, but the hour candle itself is not giving me vectors. I'm going to be waiting. I'm going to wait to see. And then I'm going to say to myself, okay, I'll wait until price comes back into those vectors and say, if there is strength in this move to the upside, and given that the 1 hour candle was not a vector candle, I can assume that the next candle could start and it actually becomes a vector candle. Okay. The hybrid system and the vector candles themselves are a representation of the speed of price and the amount of transactions that happen at a specific point based off retail traders' commitment, dealers, market makers, you name it. It's the presence of movement. It's the presence of commitment. It's the presence of value. All right. And then you've got to effectively try and collate all that information from one candlestick and assume that in the future that is going to be sustained, which means when price makes the move to the upside, okay, the logic says rise, retrace, continuation to the upside. Right now, we're playing the retrace. It's already made the move up. It's going to then come back down and test the strength of traders inside of each of these ranges. We can see here that it's not actually doing anything. And this is just for gold. Take the same logic and put it to Bitcoin. Take it to Ethereum. Take it to Aussie yen. Take it to dollar yen. Do whatever you want with it, because the fundamentals of it apply through all asset classes. The only difference is one asset might do it quicker than the other. That's it. All right? Cool. 92K Bitcoin. Anyways, ladies and gentlemen, if you are new to the Traders Reality channel, go to the Traders Reality website, okay, and click on home and join the Discord, where you can join the community over there, and you get all sorts of fun and games on there. But you join the Discord through here, okay? Shut up. And you can see the Discord, and the indicator installation is right here as well. It takes you straight to TradingView, and you can enjoy a nice little video of me talking about it, but I do need to redo that video. But anyways, that's another story, okay? And then, of course, check out the rest of the tabs at the top side, and you'll get more information on the hybrid and the memberships and what have you, okay? With that being said, guys, mad love and respect. Trade with safety in your mind, and I'll be tuning into you all later on tonight. All right? Take care of yourselves, gang. Mad love. Peace. I haven't blinked in a long time, man.